What's up, gang? It's your girl RomY. I hope everyone is doing well as you can be during these trying times. Let's start with a little housekeeping. I'm not a financial advisor and this isn't financial advice. If you like the video, give it a quick thumbs up. If this is your first time here, welcome to the channel. Don't forget to hit subscribe so that you can be alerted to whenever I post. Also, I provided a link below in the description so that you can avail yourself to some free stocks. So, what a tumultuous week, to say the least. But the stock market seemed unaffected and unfazed by Wednesday's antics. We had things like Tesla doing Tesla things, running up, but without pause this time. We had Apple giving us another opportunity to get in. And congrats to you if you took the trade. We had GM finally starting to make moves and receiving the recognition it certainly deserves and getting a few upgrades, and hopefully you use the charts that I provided in the previous videos to enter the trade and get in at positions at the support levels. Gap bounced off of the former lows, also providing another opportunity to get in at support levels. Starbucks pulled back precisely to those support levels and now it's on the move. Dividends, hopefully if you entered into some of those dividend plays, you received something, and congrats. Bitcoin was just a beast, and some analysts are predicting that we'll see even higher highs, that it's set to double. And well-known analyst and regarded analyst Kathy Wood, who heads ARK Investments, said at one point that Bitcoin could see 500,000, which is just incredible. I took advantage of fractional shares in Robinhood and finally drank the Kool-Aid and started a small position. I don't know how to chart Bitcoin. I'm open to suggestions, just to know what drives it fundamentally and just what the technicals are so I can analyze it. I think some of us are just truly intimidated by Bitcoin. So I promised more consumer discretionary names, but I didn't want to cram it all into this video, so be prepared for another video later on. How great is that, right? Also, I wanted to share a progress report for the small portfolio. So let's start with another consumer discretionary name, Foot Locker, ticker FL. So most people took to working out in or around their homes, running, biking, what have you, since the gyms were closed. So people took to investing in workout gear to facilitate these activities, right? We also had new releases. So where does one go to purchase new releases besides the manufacturer? A place like Foot Locker. Don't be confused. Foot Locker doesn't just sell shoes. Foot Locker sells apparel, Foot Locker sells accessories, Foot Locker sells shoes and shoe care. And believe it or not, those new sneaker releases sold out on the site. Now, they've always had the digital capacity to handle online orders. You can also order online and pick up at the store for a contact-free transaction. So during my perusal on the site, I noted things like a program called X Point that you can join for free. You can get your product shipped for free. You can learn about items dropping before others. You can redeem X points at Champs, Eastbay, Ladies Foot Locker, Kids Foot Locker, and Foot Action. They also have something called members only experiences. So lots of exciting things there. But let's get into the chart. Foot Locker has made a full recovery since the March lows, and they're currently trading at $43.89. I found support at $43.45 and a lower support of $42.95. So if you want to scale in at $43.45, that's fine, but note that there's a lower level of support in case we see a market pullback. On corrections down, there seems to be some support at like $41.70 and $40.60. And any breakdown below there would be a sell signal for me. Foot Locker also pays dividends, and you know I love a dividend. So I thought it was important for me to share this beauty because their extended dividend date is the 14th. That means you would need to be in this trade 2 days prior to their extended dividend date. So briefly, to be eligible for the dividend payment, you must purchase the stock or already own the stock 2 days prior to the date of record. Let's discuss another ticker in the consumer discretionary space, AN, and that ticker stands for AutoNation. This falls under consumer discretionary and then automobiles, just in case you're creating like a flow chart and taking note of the names that I'm giving you. So AutoNation has been on a tear since the pandemic, and I don't foresee that changing anytime soon. I also don't see that it's safe to say post-pandemic, and I'll tell you why. I see COVID playing in the background just like the flu. Reason being is, not everyone is going to opt to get vaccinated. So who's to say that that cough, that fever, that chill, those body aches aren't COVID versus the flu? And how do you know if someone's been vaccinated or not? Will this be the driving force behind AutoNation's survival? Absolutely not. However, it will definitely be a driving factor for hypochondriacs like myself who would prefer a contact-free transaction. Also, think about the head count. It's almost non-existent. They've also cut back on their ad spending and reduced their inventory. And those things collectively result in reduction in cost and spending. And it'll definitely affect their top and bottom lines in a positive way. So let's get to the chart. AutoNation is currently trading at 74.84. I like to initiate a position at 73.30 on or about there, and then maybe add some more if it should pull back to 71.80 with my stop at 71.50. As a breakdown below there, I believe would trigger a sell signal for me. The resistance that AutoNation needs to break is 75.95, and I think that'll be indicative of a stronger rate of it rising to my price target of $85, which I think is mildly conservative over the next 3 months. Now I want to move away from the consumer discretionary sector and move on to the industrial sector just for a moment. And let's discuss the ticker KEX. KEX, which is the ticker for Kirby Corporation. Now, KEX has 2 arms to their business. The first arm of their business is the marine transportation segment, where they transport bulk liquid products. And the second arm of their business is the distribution and services segment, where they provide aftermarket service and parts for engines, transmissions, reduction gears, and related equipment used in oil field services, marine power generation, etc. I had to write this down because it's a lot to take in, digest, and remember. So Kirby generated $2.84 billion in 2019. Now, that was down from $2.97 billion in 2018. Now, I expect that to be halved when they report on the 28th. However, they've made some difficult decisions to offset their losses by reducing their workforce. How does this help? Well, the biggest way to reduce your expenses, unfortunately, is to reduce payroll. Now, let's get into the chart. Kirby currently is trading at 56.37. The first pivot or support is at 55.65, and the second at 55, and then 54, and then 52.35, and a low of 48.5 or 48.50. Now, when I give you these numbers, I don't want you to go out there waiting for it to hit these levels precisely. Give it a little wiggle room. Create a standard deviation, okay? I also want you to pay attention to something here. The RSI is hot. It's in overbought territory. But look at the volume. It matches the price action. So the volume is picking up, and which means there are buyers, which results in the increase in the price, which in turn results in a high RSI. My price target is $63 for Kirby, which is conservative because it could well go into the high 80s. Yeah, I said the high 80s. Unfortunately, KEX doesn't pay a dividend, but let's make a distinction here between a trade and an investment. This is a trade, and we're going to wait until it comes to us at support to initiate the trade. However, if KEX should pick up steam after this video, then it would need to break a resistance of 57.30 to 57.50. And a break of that top trend would indicate a stronger rate of it rising. And that would serve as support for us. But any break or pullback or consolidation or correction would mean we could see a level of 55.65 to 52.35. And if it breaks that level, that's a strong sell signal for me. So that's all I have for now, but don't forget I said that I'd be uploading another video, and also we'd be checking on the small account to see how it's doing. So until next time, guys, when they ask you why it's so easy, tell them RomY taught me. If you liked the video, give it a quick thumbs up. If it's your first time here, again, don't forget to hit subscribe. Also, check below the description so that you can avail yourself to some free stocks. Take care, YouTube.